Hi, everyone. Welcome to Bonding Over Bonds Outlook Edition. I'm Allie Krautheim, and today I'm joined by Jim Jackson. Thanks for being here today, Jim.
Thanks, Allie. It's a pleasure to be here.
Fixed income did well this year amid some volatility driven by the Federal Reserve and the presidential election in the second half of the year. From your perspective, what's in store for fixed income in 2025?
We think there are really three items that fixed income investors should focus on in 2025. Number one is that real yields are positive, meaning that yields across the fixed income market are exceeding the level of inflation, really at a magnitude we haven't seen since pre 2008. Point number two is that absolute yields and yields relative to the earnings yield on stocks remains high as well. So we think the absolute level of yield and the relative yields to stocks also remain high. The one area of caution we have is that credit spreads, which are the compensation you receive to take credit risk, are really at the lowest we've seen in some cases since the late 1990s.
Absolutely. So we're seeing fixed income looking attractive on an absolute and also relative basis. So for monetary policy in the future, for investors that are a little bit uncertain, would you say that it's fair that they should focus less on the fact that of the pace or the magnitude of cuts and more so on the fact that it's going to be a very high bar for the Fed to raise rates again?
Our thoughts on that are that really what came out of the Fed meeting in December, obviously the Fed cut 25 basis points as the market expected them to do. But what they also did is they reduced the pace of expected cuts in 2025. So we think the Fed's primary concern is that the pace of inflation has remained stronger than they would have expected, and it's coming down slower, and also that the economy has remained robust pretty much through all of 2024. So we think when thinking about the Fed in 2025, it's really to focus on what the inflation numbers are, what employment numbers are, and what the pace of economic growth is.
Absolutely. So with that being said, are there any last thoughts that you have to share with our viewers for the new year regarding fixed income in their portfolios, what role it might play going forward?
The one thing I would point out is that the historical role of fixed income, or one of them, is that it serves as a ballast to your equity holdings. Now, this was called into question when rates went up a lot in 2022. What we saw in 2024 is that role for fixed income really has resumed. So we expect, given the higher level of yields, that fixed income will serve as a ballast to your equity holdings in 2025.
Great. Thanks so much for your time, and thanks to all of you for bonding with us over bonds.